Good morning, everyone, and welcome to our Business Warrant of Fitness webinar series, and especially today's part one, Building Financial Resilience. Here at ANZ, we're really passionate about providing a platform for virtual learning for business owners and are thrilled to bring you our Business Warrant of Fitness series to help you navigate and successfully set your business up to move forward through challenging economic cycles. What we do know is that economic downturns can be challenging and daunting for business owners, but with the right strategy, it's possible to not only survive, but thrive during challenging times. Joining me today is our fabulous guest speaker, Matt Rogers from BM Accounting. Kia ora, Matt.
Kia ora, Crystal, and good morning, everybody. Thanks very much for joining us all.
And we will be focusing on the presentation at hand today. So we're going to take you through some what we call good to know stuff, which is our important information. The content we take you through today will be of a general nature and deemed for information purposes only. However, if you do hear something that triggers the need for you to seek advice, please feel free to reach out to the specialist of your choice that is authorised to give you that advice. And I will facilitate our Q&A session with Matt at the end. So on that note, team, it's my absolute pleasure to hand you over to Matt, who's going to take you through our very awesome part one, Building Financial Resilience. Thanks, Matt.
Good morning, everybody. Thanks very much for your time this morning. So my name is Matt Rogers, and I am a director at BM Accounting Limited in Havelock North, one of accounting firm with 5 directors and about 45 staff, and a lot of the work that we do is in these sorts of areas, helping our clients to create strategic plans, to make sure that they've got good systems of accountability and regular check-ins and really know what's happening with their business. So really excited to spend the next 45 minutes or an hour with you guys talking through some of this stuff. Our agenda for today, so we're going to cover my concept of the 5 Fs just very quickly, which we'll work through in these 3 workshops. I'm going to have a quick little chat about economic cycles and what we can sort of expect and what the triggers and the opportunities that you might start seeing in your small business might look like. I'm going to have a quick chat about assessing your current position, and then we're going to spend most of the meeting, most of this webinar about talking about what you can do to start getting the framework for a nice, simple strategic plan, and most importantly, implementing and monitoring that plan. So a lot to get through in the next 35 minutes or so, and then some questions at the end, but we'll see how we go, and do keep those questions coming into the chat so we'll make sure that we're answering anything that might trigger for you as we're going through. So the next slide, the 5 Fs. This is basically what underpins all of our conversations with our clients. And my argument is that as a small business owner or a business owner of any size, these are the things that you need to work on. And the reason that we've got a pyramid structure here is that you need to really have a good solid grounding on the layer below before you can move up the chain. So I'm just going to very quickly talk through these sessions, these layers, because session 2 and session 3 will focus on the foundations and the focus area. We might not have time to get to fortune and freedom, but I think still an understanding is important. So as a small business owner, I think first and foremost is your plan for the future. To have some sort of an idea of what you are trying to achieve and where you're trying to get to. That might be different sort of timeframes and things, but you want to be really clear on where you're trying to work towards. All too often, I see too many business owners who are just going through the motions. They're fighting the fires as they are today, and quite often they're really struggling to remember what it was that they got into business for or where they're trying to get to. And we'll cover that a bit more in terms of strategy and also risk management today. Once you've got that really clear idea and you keep checking in against that, the foundations piece is making sure that you're using all of the wonderful tools and things out there today, that you've got great numbers, really relevant numbers to your business at your fingertips all the time, and more importantly, that you know what to do with those numbers. So the world of small business has changed amazingly over the last 10 or 15 years with the rise of real-time reporting and cloud solutions and things. But again, there's a real need as a business owner to really understand what your key numbers are, what your key business model looks like. And we'll explore that in a lot more depth in our next session in July for those of you who will join us, and feel free to register for that session now, because it's a really, really critical one. The third session focus is where you're creating a regular framework of accountability and a set of scorecards and things to match yourself against. So that's where we start budgeting and having good KPIs and making sure that we're tracking well against those. And again, if you don't have that regular framework for checking in against that, you're kind of punching in the dark a little bit. So for every single business owner, you've got to have that idea of where you're going, good, clear, relevant numbers at any given time, and then a system for checking in. And if you're doing that, you will be in the top 2 or 3% of small business owners out there, because all too often we lose sight of those bigger pieces of the puzzle, and we're just doing those daily tasks and fighting those daily fires and not actually getting anywhere. So really, really important. The fourth and fifth steps, I think, are critically important once you've got that base. The argument I make with my clients around fortune, that's really appreciating that your business that you're building should really be your single biggest assets. All too often in New Zealand, we get very focused on property in our houses, and you can have lots of good conversations with around the barbecue or with your friends and things. If you ask any single homeowner out there, what is the value of their home today? How much debt have they got against that home, and therefore, if they sold their home, what would they make? What would they be left to realise? And if you said to them, "Here's $50,000, go and spend it on the one or two things that would drive value the best in your house," every single person just about could tell you what those things were. If you ask the same questions of the average small business owner, or even medium or large business owner in New Zealand, quite often they'll look at you with a bit of a blank look and have no idea around those things. So I think it's really important that we change the narrative, and that's what our fortune piece is about: understanding how, where value is in your business, and how you can grow that, and where you should be investing your time and your money to further develop that. And finally, freedom. Once you've done all of that hard work on the way through, how do you actually get out? How do you find an exit strategy? How do you find someone who's going to pay you that value, and ultimately get a fantastic return for all of the wonderful work that you've done? So a lot there that we go through with our clients, and I think this is something that you should be putting more pressure on your financial advisors and your team to support you with. There's an awful lot of support networks and things. If you are not getting this sort of advice and this sort of trajectory, then I think it's time that you pick up the phone and talk to those advisors, talk to those friends about how you can build through a structure like this. But hopefully the next 3 webinars are going to give some more indication as to where you start building here. So if we move forward, I think it's just important, just for context, just to talk about the economic cycles. Now, what has happened in New Zealand over the last 15 years since the what we call the GFC, 2007, 2008. Some of you may be old enough to remember what that looked like, but since then, the last 15 years have actually been pretty stable, solid growth years for New Zealand as an economy, and for most of our small business owners. It's been quite a bit of time since we've had some real volatility. So I just wanted to talk you through the 4 main parts of an economic cycle. Now, the first is expansion, and that's basically been what the last 15 years has been. And what expansion is at a macro level, at a national level, solid GDP growth, and relatively low unemployment, and those unemployment figures dropping or coming down very slightly on a regular basis. So there's modest inflation. You can increase your prices modestly year on year. There's modest wage growth, and everything kind of ticks over really well, but it's slowly growing. And what happens during those times is people get a little bit complacent, and they don't have to as much as they might otherwise look into all the dark corners of their business and actually really get hungry about, am I spending things on the right place, or am I making the right decisions around who my customers and things are? Because generally things tick over pretty well. And that, and a lot of businesses, particularly those that have been around for 2 or 5 or even 10 years, it's generally been fairly smooth sailing. What tends to happen at the end of an expansion period is what we call a peak. And that's where everything starts getting a little bit more frantic, and everything seems to gather in pace. So it's things that you see like inflation suddenly becomes really, really rampant, and we start talking about a lot. Prices almost come a little bit out of control. We're at full employment. So it becomes really hard to find people because most people have got a good job and they're reasonably well paid. So if you're looking for a resource or someone to help you in your small business, it's really, really tough. If you're going to get someone, if you can find someone to begin with, you've got to pay them an awful lot of money for that role to get them out of something else. And the war for talent becomes really, really, quite aggressive. Costs go up really quickly. And there's a bit of a fear of missing out. So people, think that because prices and things are changing, they need to act fast because, if they don't, they might miss out completely. So we see that in our property and in business transactions and things there. People make very fast decisions, and that sounds and feels very much what the economic world has looked like over the last couple of years. We've had a lot of extra money washing around the system off the back of COVID and things, and generally a lot of businesses have seen some really strong growth and some really, really fast-paced increases in costs and a real challenge for talent and things. So classic peak conditions over the last couple of years. What tends to happen when you've got all that heat and all of that fire in an economy is, at some point, that has to end, and it's, you have macro factors like we've got with the Reserve Bank, like we've got with our government, wanting to dampen down some of those elements like inflation and things. So we then go through a contraction phase, and the argument would be that we've certainly hit the start of a contraction phase. We know that some of the commentary that's coming from our Reserve Bank governor and things is that they want to see some of those indicators like the cost of things coming down, and they're almost trying to manufacture this for us, and it naturally has to happen because it's been a long time that we've sort of been in expansion and peak areas. So you start to see that some of your sales will start to disappear. People, will be thinking a lot more. They're coming under a lot more pressure from a household point of view. They'll start to make a lot more discerning decisions about where they're spending their money, and you might start losing some sales. You start seeing some talk about redundancies, and we've seen a little bit of that in the media, particularly some of the bigger businesses tends to be where this sort of starts. So there's more people out there looking for jobs and things, and there's some cost cutting. Most people are starting to now look at their overheads and things. So it's a much tougher time. That said, it's actually the time of real opportunity for so many businesses. And some of the research and things that I've read recently has suggested that the last major contraction that we had back in 2007, 2008, businesses that really buckled down and focused and had some good strategy and things at that point were actually able to outperform their competitors by sometimes as much as 20 to 25%. Whereas during the expansion times, when everything was pretty good, no one really outperformed anyone else by anywhere near that sort of level. So there's an opportunity here that by doing the right things and focusing on the right things, you can actually use this contraction period as an opportunity to do some really good things in your business and find some new avenues and actually get yourself a little bit further ahead than you might have been able to do during the expansion and peak phases. The final one there is a trough, and that's largely where the market bottoms out, similarly to a peak, but at the opposite end, and there's a slow recovery. So GDP falls by less, the unemployment rate starts to stabilise, but generally there's still a little bit of cautiousness with people because it's been a bit of a tough few months or even a year, 18 months through a contraction phase, so people are hesitant to jump back into things. But that, if you can identify the trough, that's where the real opportunity is, because if you can get in at that sort of time and make some good moves from a business point of view and be quite clear on your strategy, then you're riding the expansion wave for as long as you possibly can. So hopefully that just gives a little bit of an indication of what we're looking at. Certainly, I think times are tougher for small business owners out there at the moment, but there is opportunity. And by doing these things that we're talking about today and over the next couple of webinars, looking at your strategy, making sure you've got good numbers and know what they're telling you, and having a regular check-in process, you will be in a much better position to ride out some of these challenging times. So before you get too deep into strategy, everything still comes back into knowing your financial position and especially the importance of cash flow. Now, there's a couple of quite technical ratios that I just want to try and simplify and walk you through that I think are really important. And the first one is called your current ratio. Now, to calculate your current ratio, you need to take your current assets. So when I talk about current assets, those are the assets available to you at the moment. And usually for most small businesses, they're going to be the cash in your bank account, how much cash you have right now, your debtors, so any money that's owed to you and due to come in over the next month or couple of months, and hopefully we're trying to stay on top of that to make sure that we're recovering our debtors fairly quickly. And for some businesses, our inventory or our stock, the things that we've got available to sell. So if you add those three figures up on one side, your current assets, and then you look at all of your current liabilities, all the things that you need to pay in the next short term. So again, if you've got a good balance sheet, these will be easy to find, but they're things like your creditors, the money that you owe to all of your suppliers and things at any given time, the money that you owe to the IRD, so what your current GST position and PAYE position and things are, and any other short-term debt, so 1 year's worth of loan repayments back to the bank, we would call the current portion of the loan. So you add all of those up, and what you are looking for is that at any given time, your current assets are more, and hopefully reasonably more, than your current liabilities. So 100% is the baseline. Your current assets are exactly the same as your current liabilities, but really you want them to be at least 1.5 times or 2 times more than that. If that current ratio comes out to under 100%, you are constantly going to be running into cash flow troubles. And for that reason, you need to very, very quickly, businesses can survive without making a profit for a little bit of time, but they very, very few can go forward if you don't have a solid cash flow position. So you need to know those numbers. You need to be across them, and you need to have some strategies for improving them. How do you drop your liabilities down a little bit or build up some reserves and things in there? And a good financial advisor or a good mentor or someone will have some really good ideas as to how you can do that. There's an extension of that I think is quite important. So normally I'd like to see my clients with a 2-to-1 ratio of current assets to current liabilities, particularly in a contraction economy. There's also another ratio called the quick ratio, which is exactly the same calculation, except now you take your stock or your work in progress out of the calculation because it's not that easy to turn into cash really quickly. So if you, again, do that same calculation and you're still above 100%, then you're in a pretty good place to manage some of these waves and things. If you're not, again, if when you've taken your stock out, that you were over 100, but now you've taken your stock figure out and you're under 100, you probably need to build a little bit more buffer into the mix. So it's the really, really important element from a cash flow point of view, and when you're working with your bank and working with your key mentors and things, really, really good to have those numbers to hand and really understand them at any given time. The other ones that are really, really important and every business owner should know is your gross margin and your break even. So gross margin means that you've got to go through all of your expenses and decide which ones are variable and which ones are fixed. And what I mean there, a variable expense is one that changes depending on your sales. A fixed expense is one that you've got to pay no matter what. So things like your rent. If you're renting something, you pay that every single month, doesn't matter how busy you are. Something like your freight cost, if you're sending products and things out, that will be variable and it will depend on how much you're selling. And the months that you're selling more, your freight cost will go up. And the months that you're selling less, your freight cost will go less. So going through all of your costs on your profit and loss and basically making sure that you've got them separated out between variable and fixed. And what you want to know is the percentage. So when you make a sale, what is the percentage of that sale that's lost to variable costs? So if you're selling something for $100, an item of clothing, if you're a retailer, the sale that you've made is $100. the cost of the item that you've sold is, let's say, 40, and the freight cost is 10. So your total costs for that $100 are 50. So therefore, your gross margin, you would be left with $50 out of the 100. Your gross margin would be 50%. You really need to know what that gross profit number is, or gross margin number is, and then you use that to work out what your break-even sales number is. And to calculate that, you take all of your fixed overheads, the list of everything that you've got there, and you divide that number by your gross margin. So if my monthly fixed overheads are $1,000 and my gross margin is 50%, 1,000 divided by 50% is $2,000 of sales. I need $2,000 worth of sales every month to break even. And if you know those two numbers, you are, again, well ahead of most small business owners out there. And you will have a much better chance when you now come into doing your strategic planning and making sure that you've actually got realistic numbers to hand to get to where you want to go and start to realize those goals. So I'm going to go into this in a lot more detail with some, with some real examples and things in our next webinar, but just to let you know that those two things, cash flow and your break even, are really, really important numbers to know. And again, put your pressure on your mentors and your supporters and your financial advisors to help you to calculate these numbers, because you will have so much better chance of surviving and doing really well in a contracting business economy if you've got those numbers to hand. So let's move on to creating your strategic plan. Now, this does not have to be a great big long, and in fact, it shouldn't be a great big long 2-day process where you come up with pages and pages of strategy and everything else. This could be something as simple as you sitting down by yourself with a cup of coffee at your favorite coffee house on a reasonably regular basis and writing it out on a napkin, or making some notes to yourself on your phone as to where you're trying to get to. But the key components of a strategic plan is first and foremost having some goals and being able to articulate those to yourself as to where you want to get to. If you can't internalize and talk to yourself and really be clear about what you're trying to achieve, then it's going to be really, really tough to go and do this. So what I like to do with my with my business owners is I do what's called a now, where, how. So what we do first and foremost is we sit down and we list everything out that is in the business now. So everything you can think of. What are your sales at the moment? What are your customers at the moment? What are the things that keep you awake at night? What are the stresses? What are your major suppliers? Get that all out and get it all onto a nice piece of paper, what the situation looks like now. Then completely forget about that and think about where you want to be. And this can be really, really blue sky. So put a time frame around it. Something like 2 or 3 years is a nice sort of time frame, and get really ambitious about where you would like to be in that time. So, and go through the same process. What do your sales look like at that point? Who are your customers? Who are you looking after there? What do they do? What sort of people are they? Where are they spending their time, and what do they sort of look like? Get very clear on that. Is there a key supplier or a difference in your balance sheet that would you like to have some debt paid down? Would you like to have more time to go and do some of your hobbies and things? It really doesn't matter. We're all individuals and things are quite different for all of us, but you need to be really clear and be able to articulate that where you want to be. So once you've done those two pieces of work and you've got where you are now and where you want to be, you then start brainstorming all of the different things that you would need to do to get from now to where. And list them, and there's no bad ideas, but everything on that list should ultimately be enabling you to take a step from where you are now to where you want to be. So get that list out, try and get as many things down as you possibly can, and then try and group them together. See if you can see some relationships and some things that sort of seem similar. They might all sort of come in under a marketing wing, a whole bunch of things that I've got to do around marketing and sales and finding new customers and developing new products or something like that. It might be a whole bunch of conversations that you've got to do around technology and getting much better information and things like that. It might be developing better relationships with suppliers and starting that ball rolling. So try and group them all into bigger areas. And then what you need to do is start to rank the priority of those different areas. And the way that I like to do that is I give every single one of those initiatives a score on how valuable each of them would be. So the value that if I could get that done, what would be the value to me on a scale of 1 to 5? And secondly, how easy would they be to do? So something might be really, really valuable and get a 5, but it might be really, really hard to do. It's going to take a lot of time. It's going to take a lot of energy. So it might get scored a 1 on the ease scale. Once you've ranked all of your ideas and given them a score for value and a score for ease, multiply those two numbers together, and that will give you a score for each plan. And what tends to work really well is if you start at the highest value scores, then that's a great place to start the strategy. And the other really important thing for strategy is only ever having 1 or 2 things that you're really focusing on at any given time. Because as a small business owner, you know that you're wearing so many different hats, so many different things going on. If you've got a strategy list in your strategy plan that's got 15 things on it that you need to do, you're always going to fail because there is just too much going on. Where do you focus your efforts? What's more important? You haven't answered those questions. So if you've gone through and said, right, for the next 2 months, I've done my value ease, I've got all these calculations, I've got this one initiative here that scored really high because I gave it a 5 for one and a 4 for the other, so it's 20, it's well ahead of everything else. I'm going to focus my efforts on getting that done. And the reason that it's high is because at the moment it's easy and it's valuable. What you'll find will happen is if you get that done, you feel fantastic because you've actually gone and achieved something. But secondly, when you come back and look at that plan again, because you've got to keep working on this all the time, and you go and rescore all of those other initiatives, you might find that something else is now changed drastically. It's so much easier because you've gone and got something else done. So things are moving and dynamically working all the time. But if you're moving towards one of those goals, it's going to make everything else change and move around it. So that's the really ambitious side on a strategy point of view. The other thing that strategy needs to look after is what are the risks? What could go wrong? And you do that as a completely separate exercise. And what you want to do there is just list out all of the things that could possibly happen in your business. That might be something like losing your biggest customer, having a natural disaster that comes through and takes away your work premise or does some damage to your stock. It might be something like a cyber attack, which we're seeing more and more of out there, that suddenly your data all gets taken, you don't have access to anything there. It might be something like your health. You get sick for a couple of months and can't work as hard. List all of those things out, and then again come up with a score against each of them. And the way to score risk is to look at 2 factors, exactly the same as strategy, but your 2 factors this time are how likely is something to happen, and if it did happen, how impactful would it be? How big would be the impact on my business? So something like losing a major customer might be a 3 on how likely it is to happen, but it would be a 5 on the impact. It would be really serious if I lost my major customer. So again, go through all of those, come up with a priority listing of risk. So anything that is at a higher level, closer to a score of 25, are the things that you desperately need to look at right now. You can't afford to go too much longer without having a contingency plan or some idea of what you would do if that was to happen, or what you need to do before that happens is probably a better way of looking at it. So if right now the risk of you losing your biggest customer is quite high because you sort of think that the relationship's looking a bit strained, and quite impactful because it would be 40% of your revenue walked out the door tomorrow if you lost it, then your contingency would be going and finding 2 other customers pretty sharp to make that risk far less. If you had 3 customers at that sort of level, then the risk of one of them walking away would be far easier for your business to absorb. If it's something like losing all your stock in a natural disaster or something like that, can you do something like have some of that stock split around the place? Can you have some of it here and some of it there and do something there to mitigate and limit the risk a little bit, so that then once you've got a few of those strategies in place, you can go back through and redo your scoring, impact and likelihood, and hopefully you're bringing the impact of those down. So 2 different things going on: the aspirational side of things for what am I working towards to get towards my goals, but also what are the things that could go wrong. And right now, as we're going through a little bit of a tougher sort of time as far as the economy goes, the risk of a few of those things going wrong are probably a little bit more likely. So again, if you're actually doing this piece of work and thinking about all those things and coming up with a bit of a strategy to deal with them, you're going to be so much better off, because if something does happen, A, you've already done something, or at least you know what you need to do very quickly to deal with that. And again, very, very few small businesses do this. They just sort of get by on a wing and a prayer and hope that everything's going to be okay, and then react. And generally, we're resourceful people in New Zealand. We generally react pretty well, but you can do yourself such a favour by actually being ahead of the game and being proactive. So my recommendation is that you actually make time to sit down and cover those 2 elements on a really regular basis. Work out the cadence and what works for your business, but every month you should be sitting down, making time that isn't distracted by anything else, away from your normal place of work or your office or your family or anything else, where you can really just put your head down and make time to do the strategy stuff and get excited about where I'm going towards and am I working towards those goals, and secondly, do the risk and the contingency stuff. And a nice way of doing it for a lot of small business owners is to have odd months on strategy, on exciting stuff, and even months on risk. So you're making time every month to sit down and do something, but you're flipping between those 2 sort of elements, and try and get it down into a single page for both of those things. And then once you've done your prioritization, you're always working on the top scoring thing on both sides. You're focusing on one thing and you're either moving it forward from a goal point of view, or you're fixing or creating the contingency from a risk point of view. And again, you start doing that, everything else that we start talking about in these webinars and for all of your other business decisions and things that are going on, you will find will be so much more simple and easy, because you've actually taken the time to A, be deliberate about the actions that you're taking and what you're doing, or secondly, look at those risks and be a lot more prepared if anything does go wrong. So the next page there, implementing and monitoring a strategic plan. This is where most strategic plans and contingency plans fall over, because a lot of people will actually make the time, get excited after a webinar like this and think, yes, that's something I can do, and they'll make the time and they'll go and do it, and then they'll get busy and they'll never refer back to it. So the most important thing is that you create accountability in this, and that will be individual for each of you as to how you create that accountability and how you work. I find, and the role that we provide for our clients when we walk them through this, is we provide the accountability role. We actually make sure that meetings are generated on a monthly basis, and we sit down and do this with our business owners, and we are very demanding that something has actually been done. And our clients love that, because they know that it creates the accountability. They know when they're coming to those meetings, they're going to have actually done something, even if that doing something was picking up the phone to us midway through the month and saying, I'm really struggling. I walked away from last month's meeting and said I was going to do this, and I've got too much going on. I don't actually know where to start. What should I do? But at least they've done something in that month. So we really do pride ourselves on creating that accountability. If you've got fantastic self-discipline and things, you can create that accountability yourself, or maybe this is with a key family member or a business mentor or your spouse or partner, something that's where you're going to be quite overt and open at the front end and say, right, this is what I'm working on, here's my plan, and in the next month this is what I'm going to do, and what's it going to look like at the end of that? Where do I want to have got that to? So be really clear, the basics of SMART goals and things. So make sure that you've got a time frame, and make sure that you can very clearly measure whether you have actually got somewhere or not. And the better that you scope this side of things and do it up front and make sure that you're very clear on what you're trying to do, the far more likely that it is going to actually happen. So if you're bringing in other people in your business, if you're not just running your business by yourself, or you've got some other key people like your financial advisors or a good management team or a business partner, make sure you sit down and have those conversations and are really open, assigning responsibilities and roles, who's doing what, who's responsible for getting something done, and what's the date that that's going to be done. And make sure that you're allocating resources appropriately. Is the right person doing the right thing if you've got that situation? And do you have the time to do what you've set out to do? This is really important and needs to be put as at the forefront of what you're doing. What I recommend to my business owners is that they block out some time. First thing on a Tuesday morning after they've dropped the kids off at school, that's your coffee time. You go to the coffee house, you block it out. Don't take your phone or have your emails or anything there, and you sit down and you do your strategy piece and make sure you've moved things through. That works really well for some people. Other people will chunk it down into smaller amounts, but you've got to make time for it. This cannot be something that just fits in when it can fit in. If you don't make time to put this at the very front end of what you do, then it will fall over almost every single time. So find that accountability, make time for this, and make sure that you are moving towards it. The points there on screen about the importance of continuous monitoring and tracking progress and identifying warning signs this is always fluid. Things change all the time, and that's why, both positively and negatively, and that's why you need to keep coming back and addressing your risk plan and your strategic plan, and seeing what has changed in the meantime. So that scoring system that we talked about previously is still a really, really good way of just going back over it, looking at the last time that you scored it and giving everything a new score. What's changed? What's moved? Are there things that I've done positively that have made things easier or meant that my risk has dropped? Or is there something that was outside of my control that suddenly meant that something's completely different? Does my strategy need to completely change? And that's okay. Absolutely fine if other things have gone on, because if you are regularly looking at these sorts of elements and regularly checking in and changing and refocusing on what the thing is that I need to work on in the next month, then you're still going to be moving towards where you need to be getting to. Just starting and doing these things in nice, small, manageable chunks is the absolute secret to this happening. Too many business owners get really excited about this side of things. Initially start off with a hiss and a roar, throw a whole bunch of effort into it. And then because there's not sort of the implementation plan and that regular commitment to it, they suddenly, it's like New Year's resolutions. No one falls off a New Year's resolution on the 1st or the 2nd of January, but by the 5th and the 6th of January, 20% are gone. And by the 9th and the 10th of January, 50% are gone. And by the end of January, you're down to the last 1 or 2% that have actually stuck to it. I would love for you guys to be the 1 or 2% that just does this in nice, small, manageable chunks, doesn't make it too much of too big a deal, but really understands that it is critically important for your business to be successful and for you to have the best chance of being able to navigate things that are changing on you all of the time. So I wanted to leave plenty of time at the back end for questions. I wanted to keep this to 30 to 35 minutes, but just a quick recap on what we've talked about today. So those 5 Fs, future, foundations, focus, those are the 3 most important. There's definitely the fortune and freedom element, but having that strategic plan in place, good numbers to hand, and then a regular system for accountability. I'd love for all of you, if you don't feel that you've got that at the moment, to really take steps to working towards that. And there's wonderful resources and things out there to help you with that. Your financial advisors and advice team, this is what you should be asking of them, more so than just a set of accounts and a tax return each year. You should be putting more pressure on these guys to be actually helping you with stuff that matters in your business on a daily basis. And there's a wonderful network of great mentors and supporters and things out there who will help you. I read an article yesterday about how lonely it is as a small business owner. And it certainly can feel that way a lot of the time. You're wearing all of the hats, you're taking on all of the pressure, you're trying to juggle a million other balls as well with everything else going on. So reach out. And there are 576,000 small business owners out there across New Zealand. Reach out and have a little group with a couple of your other friends and networks who are doing this sort of stuff, and talk about these things and support each other and give each other a bit of an ear. This doesn't have to cost the earth. It doesn't have to be a big expensive exercise, but it does have to be done for successful business owners. And right now is the most important time to be doing it. Think about those economic cycles. Just we do understand that we're going into a bit of a tougher sort of time, but that's not necessarily a huge negative. We do need to understand exactly what makes our business tick, and we will go into this in a lot more detail when we talk about key numbers and what we should be tracking. But if we're doing that really well, this should be a great opportunity for us to shore up what's really good and successful in our business, maybe cut away some of the wastage and the things that are actually not helping us to get towards our goals, and ultimately have a much stronger and more vibrant business going forward. I think of the analogy of roses for you gardeners and things out there. June, when the weather's pretty poor, is the time to prune those roses and prune them pretty hard, and then you've got wonderful, amazing plants for the spring and the summer, and that's exactly what you're doing with your business right now. Be really clear on those key financial ratios, on exactly what your cash flow position is, what that current ratio looks like, and also your gross margin and your break-even position. They are critical numbers to look at, and just know at any given time exactly where you stand, and they're constantly changing. So you need to be looking at them on a regular basis. Again, we'll go into this in more detail when we talk about financial numbers next month, but you need to be constantly sure of your accounting software or your reporting, and making sure that you're making those calculations and adjusting your strategy to fit. Creating a strategic plan, nice and simple. 2 wings to it: strategy and risk. Make sure you're spending time on both of them. Strategy is all about where you want to go and what the most logical steps for you to take and the most beneficial steps for you to take are, and distilling that down into a single thing to be doing on a regular basis. And exactly the same thing with risk. How likely is something to happen? What's the impact if it does happen? What can I do to make that less of a risk or less impactful on my business? And crucially, create that accountability for yourself. Have that trusted person who you can sit down and be really open and honest with, who's going to hold your feet to the fire a little bit, make sure that things are happening, and that you're doing this in small chunks but on a really regular basis. And if you're putting ticks against all of those things that we've just talked about, then you've got a fantastic chance of really doing well. Next steps, where to from here? Find that accountability partner, or that someone who's going to help you with it. There are plenty of people out there who will do this, and as I've gone through a whole range of different options, they don't have to be hugely expensive. They can be from within your network and things there, but get some support, get some guidance. You don't have to do this all on your own. Ultimately, it's going to be you that drives it and makes it work, but there are plenty of fantastic resources and things. So just jot down in front of you today what that next thing that you're going to do, the phone call that you're going to make, the email that you're going to send, the coffee date with yourself that you're going to put into your calendar and make sure that it happens, and take that first step into here. And you will find that once you just start slowly stepping into things, that it's nowhere near as daunting as you might have thought, and you feel really, really good about gradually making some progress and feeling like you're ticking off a few things within your business. So on that note, with about 15 minutes left, I'll throw back to Crystal, and we might run through some of the wonderful questions and things that have come through in the chat.
Great, thanks. So one of the questions was, what's the best strategy for increasing profitability in this current economy, which is a really great question. So what are your thoughts on that, Matt?
Great. So really good question about increasing profitability. And actually, I find the answer is a bit counterintuitive, actually. And one thing I would suggest is losing some of your customers might actually be one of the best ways to profitability. There's a really good rule called the Pareto rule, and that is basically that 80% of your profits are generated by 20% of your customers. So having a really good process to identify which of those customers are the ones who are most profitable, who you enjoy spending the most time with, and who actually really value your service, and working out which may be the 20% that take up 80% of your time and create 80% of your problems and maybe aren't actually contributing that much to your overall profitability is a really good process to go through on an annual basis. And most businesses will actually find that if they drop those 20% of customers that are causing all those issues, their profits will actually go up as well. So counterproductive, but sometimes it is better to lose customers and gain profitability.
I love the different perspective, and that's what these webinars are about, bringing a different view, a different perspective. So thanks, Matt. Hey, one thing I just want to quickly ask before we deep dive back into the chat bar was you did talk about mentors and that support system. And I totally agree. I think that's an awesome way to, or something different to think about. But how, if I'm new in business or I've been in business a while and I've never had a mentor, how do I go about getting a mentor? Where do I actually start?
Yep. So businessmentors.co.nz is a fantastic resource and starting place, and there's lots of people like me who give our time to that, and that's a really well-funded program to get you underway and get a bit of a relationship with someone else. The other thing to look at is accounting firms in your region. There's a lot of firms now who are starting to do what we call one-to-many education programs and things. So we realise and understand that this stuff is really, really important, but it can be quite expensive to have a one-on-one relationship with an accountant. So what we will do is we will get 6, 8, 10 businesses into a room, and we start having conversations like this and setting up those little network groups. So we're running what we call those incubation sessions on a 3-monthly rolling basis, and invite customers to come along and get an introduction to strategy, and then forecasting and regular reporting. And it's a great starting place, very, very low cost and easy to get into. And what a number of clients will do once they've spent time in that incubation is then feel they can grow into other areas. And I know I'm part of a large collection of accounting firms around the country. I know that this is an area that a lot of firms are now starting to look at. So give a chat to your current advisor, or start doing a bit of a search and seeing which other advisors in your location are maybe offering those sorts of education type sessions. And networking groups. Your local Chamber of Commerce will be another one that probably has some ideas and some opportunities to create some of these groups and things, and where you can go to for very, very low cost initially and start having some great conversations. So yeah, there's plenty of avenues and opportunities there that don't necessarily have to cost thousands and thousands of dollars for your small business.
That's absolutely fantastic, and I'm sure everyone here today appreciates that support, and I love the little incubator groups. I think that's amazing. So here's a question from our audience. The cash flow checklist, how often would you recommend to do this? And this is a great question, i.e. should I be doing it monthly, quarterly, etc.? And how far out would you do it for, i.e. 6 months, or looking forward, or 12 months? Great question.
Really good question about cash flow checklists. This isn't something that you would do on a monthly basis, but basically it's something that is always always live. It's something that you want your numbers to be really solid and accurate all the time, so that at any point you can have a look in your accounting system at your balance sheet and very quickly do that check. Do my assets, are my assets greater than what my liabilities are? So you wouldn't, the question there about sort of how far out would you look at it? It's more of a snapshot in time. At any given time, you want your liabilities to be less than your assets. And you can actually, with modern day reporting and some of the great online accounting tools, you can build that into your report. So you don't even have to do the calculation. It can basically be there nice and easy for you to see, but it's a really, really good idea to be quite regularly checking in and making sure that your current assets are greater than your current liabilities, and therefore you are far less likely to run into cash flow problems.
But we've got one more question for you, Matt. Thinking about the top three, just the top three common themes that a business owners are struggling with or really facing in the current economic condition. This is from your experience with your clients and customers now. Is it high inflation? Is it high in cost? What are the top 2 or 3 things that business owners are really struggling with or finding quite daunting?
Great question about the 3 common themes that business owners are struggling with. I would say first and foremost, team and time. Time would be the number one thing that comes up with a lot of my customers, that they're really struggling. It's really busy out there, and as a small business owner, you are wearing so many different hats. Everything falls on you, and you've got to keep all the balls juggling in the air, and it can be quite overwhelming at times. And let me tell you, that's okay. That's quite all right to feel that way, and it's perfectly normal. But what you do need to do when it comes to time is actually be really deliberate about it. You've got to create the time to do the things that you want to spend that are the most valuable to your business. And the stuff that we've talked about today, strategic planning and risk mitigation and creating those contingency plans, are really, really important that you're making that time. So be deliberate about it. Make sure that you're actually booking time in with yourself. That might be time that you spend with a key family member, or just taking yourself out for a coffee date, but get it into the calendars and make sure that you are really deliberate about creating that time and not allowing it to fall to the bottom of the heap just because you've got a million other things going on. The second thing that comes up all the time is inflation. It's in all the news all the time. We know that prices are increasing rapidly, that they can sometimes feel that they're getting out of control. And again, the secret there is to be really aware of what's happening with all of the costs in your business, and making sure that you're going through those on a regular basis. And checking that you're getting value for money. Where are the areas that you can perhaps get some savings, or where can you put some pressure or ask some questions back of your suppliers as to what are the crucial things to keep working with and keep paying for, and where are the areas that maybe you don't need so much, or that you can find some savings and things. And the third challenge, again, probably what's happening in the wider economic cycle, is talent management. It is really, really hard to find people to help us and create that leverage and things in our business. I suspect that this is one that might unwind itself a little bit over the next 3, 6, 12 months, as potentially some parts of the economy come under some pressure, and maybe there's some unemployment in certain areas, and maybe a little bit of freeing up in some parts for some employment and labour opportunities. And as we talked about during the webinar, this is the time where I think there is some opportunity. So keep your ear to the ground, look out for those good people who will help you to grow your business and find some opportunities. And it might be a challenge at the moment for business owners, but could certainly become a bit of an opportunity going forward.
Great, thanks, Matt. Hey guys, just before we do finish up, I want to take you through how ANZ supports our customers. We do these amazing webinars and we invite experts like Matt, which is great, but we also do an A to Z review with business specialists. So they're going to take you through thinking about it's a complimentary one-on-one service. They're going to really take you through looking at the goals of your business. Great time to come in and talk to a business specialist about where your goals and what you want to achieve. We also have business insights on our anz.co.nz page. We have experts that do in-depth analysis, so really cool stuff that might be pertinent to your industry. We also have BizHub, which is our one-stop shop off anz.co.nz for all of our business owners. Please do go and explore all of these. And lastly is our ANZ Economic Outlook. So these are publications that are really comprehensive around the macroeconomy and trends in New Zealand's financial market. So please go and check that out. It's going to help you think about and look at your business and look to the future. We hope you've enjoyed today's session. We have part 2, remember, coming up on Tuesday, the 18th of July, where Matt's going to come back, give us those amazing insights and knowledge and share all that with us again, foundation of numbers. We also have part 3, that's Tuesday the 1st of August, and that's about maintaining momentum, accountability and focus during economic cycles. So that's kind of our whole Business Warrant of Fitness series, those 3 parts. I just want to take this opportunity, big shout out to Matt. Thank you very much. I learnt heaps myself, as I'm sure all of our attendees did. Thank you for sharing your knowledge, your expertise and all those insights. It was a great session. I'm really excited about part 2 and 3 now, and I can't wait for those webinars. And so for all of you for joining us, thank you for taking time out of your business to work on your business.
Thanks everyone for your time this morning. I've really enjoyed offering some insights, and hopefully there's some good little takeaways. Good luck going forward. Even just taking some time out of your day to come to this webinar is a great first step. Thank you so much for your time, but please do go away and do something meaningful. Create that first step in your strategic plan. Go and find those first couple of risks in your business and work out what you might do to mitigate them, and make sure you're making that time for yourself to have these conversations and think about this on a fairly regular basis, and you'll be far, far ahead of most small business owners out there. So thanks for your time, and I can't wait to see you guys again next month for workshop 2.
Great, thank you. Have an amazing day, everyone.